This is Dr. Duru from Ahan Analytics with the market breadth. I'm like a lot of you. I have been glued to the World Cup drama, been rooting on the US and other countries of interest. And it had me thinking just how much this stock market looks like the game of soccer. Hear me out, because I'm going to follow these themes through the rest of the charts I'm going to show in the rest of this video. It looks like the stock market has a clear strategy: pass, rotate, advance, and money keeps moving. Leadership keeps changing. One sector runs, another sector rests. One group breaks out, another group rolls over. But the major indices keep climbing. That is the point. The market does not need every sector attacking at once. It needs rotation. Financials keep liquidity moving. Industrials provide the structure. Energy adds the power. AI infrastructure controls the tempo. Semiconductors accelerate the move. And defensive retail protects possession. Consumer names test demand. And mega cap growth finishes the attack. Now the rotation is shifting again, and I see it in the charts. Software has been playing tired for a long time. I've been making the argument for software for quite some time. And yes, it had a big setback in June, but it looks like it's catching its breath again. It looks like software is catching its breath and getting back into the move. And at the same time, semiconductors and related stocks look tired. Some are starting to roll over, but that is rotation. Capital leaves one pocket that's been overcrowded and overloved and then finds another one, right? So that's the ball moving from a place on the field that's too crowded, too much action, and find a place where there's some space to move. That's what I see in several of these sectors like software and consumer-facing stocks. And the ball keeps moving. The indices keep advancing. The market breadth is the latest confirmation because, as I mentioned before, breadth broke out. And more importantly, breadth is holding that breakout. That tells us the advance is bigger than a handful of leaders. It's very bullish, even as some sectors may be looking weak and weaker. The formation is still moving up the field. Pass, rotate, and advance. All right, let's take a look at the charts that tell this story in visual form. All right, let's start this soccer review with the big breakout right from the top. My favorite percentage, my favorite technical indicator, the percentage stocks trading above their 50-day moving average, is what I like to call AT50 above the 50. Let's remind you that market breadth is bullish now. It's broken out above that former downtrend. I will one day soon get rid of the downtrend and show what looks like a budding uptrend from this solid support line right around 50%. That's very bullish. Now let's take a look at the percentage of stocks trading above their 200-day moving averages. It is also in breakout mode, and it's looking good and confirming the bullishness in the overall market theme. So the ball is advancing here, okay? Now let's take a look at the indices, because this is where things get a little murky without market breadth supporting the picture. And the main thing here for the S&P 500 is just to show that right here, this former double top is still holding strong as a resistance slash pivot. Let's just call this the 7,500 wall for the S&P 500. So we need a clear breakout above, let's see, 75.54 to be reassured that the upward momentum, the advance, is passing towards the penalty area or into the box, right, from the index. The NASDAQ too needs to prove us something, because the NASDAQ actually today faded from a small gain to a small loss. It lost 8.8%, and it's teetering right here on the 50-day moving average. So there's three stories here. Support held, support broke down, and I'm talking about the 50-day moving average of support, and now support is trying to hold. And remember when I said that semiconductors in particular look like they can, and related stocks look like they could be rolling over? The NASDAQ looks like it's almost rolling over. In fact, if I draw a downtrend line, it'll be much clearer. So I'm going to draw it from the close of the all-time high to the nearest closes here, and look at that. It's a downtrend, right? So right now, the NASDAQ is capped by that downtrend. That's creating this rollover effect, and it's cascading to a bunch of stocks that some of them I'm going to be showing later. And then finally, we have IWM, the ETF of small caps. IWM is holding the fort in terms of its uptrend. It's still well above the 20-day moving average, which is this dashed line, and it's well above this former double top line. So it is basically holding the line on the bullish story as far as the indices go. All right. Let's start the attack on this soccer field. Starting off, we have the the goalkeeper, the liquidity position. This is financials. This is ticker symbol XLF, State Street Financial Select Sector Spider ETF. And look at this, what happened this past week. Strong breakout on Wednesday to start the month of July. We had a big 2.2% gain, and we ended this holiday shortened week at 1.5%. Oh, by the way, happy July 4th, everybody. Enjoy this weekend celebrating the 250th year for the US. How could I forget that, right? Anyway, this is the liquidity position. These are the goalkeeper, very solid foundation to start the attack. This is a big breakout. Financials are bullish. As you know, when the financials are bullish, I can't be bearish. When financials are bearish, it's hard for me to be bullish. So the financials are fortunately supporting the bullish soccer narrative. Visa, I point out Visa, ticker symbol V, because it has gone nearly parabolic. So this is great because it's a good sign for consumer spending. It's also indicative of the fact that the market believes that that the card issuers and the financials like that will survive. Sorry, I'm pulling this back so you can get context. Will survive the onslaught from digital infrastructure money like the Circles of the world. In fact, let's take a look at Circle, because stablecoins was the main story for Circle Internet Group, ticker symbol CRCL, and it's gone exactly reverse of Visa. So it looks like the big boys, the institutional folks, the old school is winning over the new school. So they've got the attack better in place for financials. All right. All right, now let's move to the back line. These are the industrials that are holding up the base of the attack. Now we have a mixed story here. For instance, oil, and this is represented by the United States Oil Fund, ticker symbol USO, has been in a downtrend. But of course, it's got its own narrative and theme, which is all about the war. And it has been going straight down since the beginning of June, and it peaked in May. So, but this is very positive for the consumer facing stocks and the consumer economy. Now, on the other mix side is Caterpillar, ticker symbol CAT. Now, it has been advancing. Let's just remind you just how strong the advance has been since last year. But things got shook up by Michael Burry, declared he's shorting the stock. I didn't look into why he's shorting it. I don't really care much about his thesis. The technicals tell me everything about what the market believes about the thesis. Caterpillar underperformed this week, first dropping 6.9% in response to the Michael Burry short news, and then it dropped another 2.8%. It's got enough downward momentum to test the 50-day moving average uptrend. And at that point, I expect it to hold. But of course, we will see what happens. Then we have other industrial stocks that have been doing really well. But this is Borg Warner, ticker symbol BWA, auto parts maker. And it broke down below the 50-day moving average. So we have some of the foundation, the back line kind of wobbly here. There's some vulnerabilities there. So we're going to need some other maybe the midline to hold up or other fullbacks to hold up the attack. All right, so now let's talk about infrastructure, because that's the other part of the back line, the defense, the fullbacks. Unfortunately, the story is also mixed here. Let's start with First Solar, ticker symbol FSLR. It has now broken back down into bearish territory. Let me just point it out here. It broke down below the 50-day moving average and then the 200-day moving average. And this was a major fake out. So think about this defense again looking wobbly because it got really I got faked out, and a lot of us got faked out, I'm sure, by this nice breakout to an all-time high that was last set in 2008. It looked like a major bullish move, no follow through, and it's been selling off almost ever since. And I really got fooled by that one. And then another wobbly one is Corning Incorporated, ticker symbol GLW. Now, the uptrend is still there. As you can see, again, just follow the 50-day moving average, which is the red line. But it went parabolic. And we always know, look, here, well above, straight up, well above the upper Bollinger Band, and here again. And now the cool off has happened here and here. Fortunately, the uptrend is still in place, but it's looking precarious, right? I'm going to really be watching closely to see how traders respond when Corning touches its 50-day moving average support. And then one of the most concerning charts I've seen in the infrastructure space. Again, infrastructure, we're talking about whether it's digital infrastructure or industrial hard goods infrastructure, applied optoelectronics, ticker symbol AAOI. Look at this. It's rolled over. It broke down below the 50-day moving average here, and it's been selling off ever since. And today's 13% loss essentially put the exclamation point on this breakdown. I am now waiting to see whether it's going to test its 200-day moving average in due time as money continues to rotate out of here and rotate into open spots in the field, right? So this has been a very crowded trade along with others of its ilk. And a test of the 200-day moving average around 85 would be pretty fortuitous because that's where the lows were defended back in March. Now we move to consumer staples. They're supposed to be the midfield holding the defense together in the middle of the field. And we've got some wobbliness there again, believe it or not. I'm sure you're looking at this wondering, okay, so who's holding up market breadth, right? Unfortunately, I don't have enough of the small caps in this story that I'm telling. But anyway, remember, we're talking about rotation here. And right now, Costco Wholesale Corporation, ticker symbol COST, is trying to make a comeback, trying to get back into this trading range. You can hit pause and review all the technical signs. I think I've talked about Costco plenty. I went ahead and bought some more on this pullback, even though technically it's in bearish position, but I'm going to believe in the defensive middle backs or halfbacks holding the line and holding strong. Now, Walmart, on the other hand, is in bearish territory. I did add some on this big breakdown. Sorry, I forgot to label it, but the big news here was a big downgrade on Walmart. It fell on Wednesday by 3.9%. That's a pretty big move for Walmart. Fell all the way down to where it traded. Actually, it's down. Wow, I didn't even notice this at the time. It's actually negative for the year now. So I think this is a great time to buy just from a long-term standpoint, even though the stock is very highly valued. Now let's go to AI infrastructure, which is like what I'm going to be calling our tempo control. Now, there's some mixed pictures here again, but look, money is starting to rotate out. Modine Manufacturing Company, ticker symbol MOD, break down below the 50-day moving average. They do heat control, and they have become really popular for the AI trade. And, that was known here. This was the last time, there was a little panic here when NVIDIA said its chips needed less cooling, and the stock has gone straight up since then. I mistakenly got bearish on this versus the other stock, which is Johnson Controls. Actually, let me just take a quick side trip over to Johnson Controls International, ticker symbol JCI. You can see it's holding firm, right? It's holding up its end of the bargain for AI infrastructure, but something's going on specifically with Modine Manufacturing Company. And then the other one I want to take a look at is NBIS. And this is a cloud AI cloud infrastructure, provider, but based in Europe. And I've been looking for a chance to buy it, and I think that chance may have come now. The stock fell 17% on Wednesday on news about Meta moving into the cloud business to supply AI compute power. You can see the selling continued big time, 6% down today on July 2nd. But it's holding the line at 50-day moving average, so I'm going to be looking to see whether that support is going to hold. All right, now let's move onto semiconductors. They've been the accelerants of the market. You know, when they move fast up, the indices tend to respond well, and when they retreat, it's a different story. And there's a little bit of mixed story here too. Let's go to the first VanEck Semiconductor ETF, ticker symbol SMH. It's sort of rolling over a little bit. Let's just put in this line really quickly here, just so you can see what I'm talking about. There have been these two moments here where this looked like a kind of a blow off top and this looked like kind of a blow off top. And now it too is falling into its 50-day moving average as support. And this is really telling the story of a lot of semiconductors. So the semiconductors are decelerating and making making space for other stocks. Now, on the memory side, we have Round Hill Memory ETF, ticker symbol DRAM, otherwise known as DRAM. It has fallen below the 20-day moving average support that has held its uptrend for its short life. You know, it was just rolled out in April, and it looks pretty much on track to test 50-day moving average support. And perhaps if it slips by there, then I'll look to see whether this old support from the former blow-off top holds. But now we have a new blow-off top, which is up here. So now, you know, unfortunately, our accelerant is not accelerating. It's actually decelerating. Can we find something positive? Well, ticker symbol AMD, Advanced Micro Devices. It's still in its uptrend and it's still holding its 20-day moving average. So there's a little bit of bright spot there. There's the open part of the field that we want our accelerants to go to. On the other hand, we have NVIDIA, which has already decelerated, but it's fighting to hold support. Very important. See this 200-day moving average? In fact, let me get my big marker right there. That blue line, that's the 200-day moving average. NVIDIA is holding the line strong. It looks ready to accelerate, but if it breaks down below that, we're gonna have to reprint the whole story and narrative. And there's also this previous all-time high that's converging with support really nicely. And then finally, on the really bad side, one of the worst performing semiconductor related plays, Form Factor, ticker symbol FORM, plunged 16% to end the week. Clean breakdown below its 50-day moving average, but guess what? You know, semiconductors have been so strong. Even this kind of big move down is like a pinprick. It only took Form back to where it was trading, just 3 weeks ago, right? That's how much these stocks have been moving up and down in the gains overall. Now, the creative midfield, I'm going to be calling that's the software stocks, okay? And they are trying to make some space, right? June was a tough month. But right at the end of the month, a rebound has started. This is iShares Expanded Tech Software Sector ETF, ticker symbol IGF. It's back above its 50-day moving average, but it's going to have to fight through the line of 200-day moving average resistance. Now, under the surface for software stocks, we have Oracle, ticker symbol ORCL, which has continued to sell off. So that's the weak part of the creative midfield. But the good news, I think the good news will be if it can hold this bottom yet again. And I called the bottom in Oracle pretty well last time, but I'm not ready to call a bottom just yet. You can see trading volume is increasing as the selling has accelerated to the downside into this. I don't want to see it go straight down into that support line. I want it to float into it so that we can have a nice bounce, but it looks like it's ready to cleave right through. So I'm on the edge of my seat looking to see what's going to happen with Oracle. I have been adding shares here, again, as a bet that if the AI trade is going to work, Oracle is going to have to turn around. Now we have stocks like Box Incorporated, ticker symbol BOX, which are now breaking out again above the 200-day moving average. I love these kind of moves because it's sloppy, but it did defend the 50-day moving average. And usually I tend to see that these second attempts are successful. And Box, remember, if you've been watching or reading my material for quite some time, is one of the original software stocks where I made the case that the selling and the AI panic and the SaaS apocalypse, I call it the SaaS apocalypse, has been overdone. The CEO has been a great spokesperson for the value still in software. And then just as a bonus, I'm going to look at BlackBerry Limited. You could call this software, you might call it infrastructure, but this has been amazing. I saw they reported earnings. I was like, wow, BlackBerry is still doing okay. It soared 20% post earnings and the buyers continued higher until today where it dropped 10%. But overall, BlackBerry is in a nice breakout. In fact, let's go ahead and take a look at a longer term, just so you can, this is old school, of course. Back in the bubble days, it soared and it actually got to even higher heights. back during the financial crisis, but now it's, it's off over what, 90%, 95%. So yes, this is great, but overall the stock is still not a good, is still a bad one if you think about the long term, but looks like a great trading stock for the short term. Then as another bonus, Sound Thinking, ticker symbol SSTI, looks like it's back in play. Nice breakout above the 200-day moving average. I took advantage of the pullback today to start buying into the stock. I'm going to keep buying until it reaches support down here and then hold the line if it does break down support. All right, so that was our creative midfield. We've got some good stuff moving. We've got support holding, but there is some signs of trouble also brewing. So the wide attack on the soccer field is coming from the consumer-facing stocks, consumer discretionary, and so on. Look at Nike. Nike ticker symbol NKE. Yes, it doesn't look like much, but in the aftermarket hours, I think the stock was down at about 4 or 5%. And then boom, came out the gates. Actually, let's make this clear. Came out the gates running, closed the day 4.9%. That's an amazing reversal. I think that's a bearish to bullish reversal on an intraday basis. So I am very positive on Nike. I didn't buy anymore just because I've already been accumulating based on, again, earlier, this insider buying by the CEO and director Tim Cook. Another one, Cracker Barrel, believe it or not, they are back in play. Ticker symbol CBRL. I've already made the case for this. I bought into the stock as a no regret buy based on assuming there'd be continued momentum from the post earnings gain, and that has played out well. This has done very well for me. This is ticker symbol CBRL. Roblox, even Roblox looks like it may be back on the move. Ticker symbol RBLX. Broke out above the 50-day moving average. It's holding the line there, and it's looking good. I did add more on Roblox because it's cleared this box that I talked about earlier that looked like a bottom, and that bottom has been holding out. And then finally, we have Meta. Now, Meta is it's on the attack, but it's very tentative. When it talked about going into the cloud business to sell access to AI compute, it soared 8.8%. But today, Friday, it pulled back 4.9%. So Meta's looking kind of tentative, and that's understandable because the stock has been in this crazy trading range since 2 years ago. So very tentative. So we're counting on the other consumer-facing stocks to really make the advance. Now, finally, I have the strikers. The strikers we're counting on to make that attack really quickly. Apple looks like it's up for the task. Ticker symbol AAPL. Look at this amazing flip. It dropped, what was this? 6% on memory and storage prices, forcing them to increase prices on the iPad and the MacBooks. And buyers stepped right in the next day, gained 3.1%. I think there were some upgrades or some analysts reassuring things, and the stock has barely looked back since then. Today soared 4.8%. Never doubt Apple, right? That was the big attack from our mega cap growth. Then on the other hand, we had Tesla. Tesla tried the attack, but had to step back after reporting Q2 production numbers. Headline looked okay for Tesla, ticker symbol TSLA, but the interpretation was negative. It's kind of odd. When I think that the headlines are bad, people buy on the production numbers. When I think the headline looks fine, the stock sells off. I don't know whether it's just sell the news, but you could see this 50-day moving average and 200-day moving average, things are just cleaving like crazy. So we had this nice big bullish breakout and now a bearish breakdown. I decided to go ahead and get a calendar spread to play a sharp rebound at some point in the next week and a half. All right, so that's all we have for the soccer attack. You can see it's not quite balanced, but there is a definite rotation going on to support the advance and market breadth. If you liked this content, go ahead and subscribe to the channel. As always, I enjoy comments and feedback. Put them down below. I'll answer any questions you have. And of course, to let the algorithm know what's up and to keep me motivated, go ahead and like that content and share it. And I will see you the next time. Enjoy the 4th. Happy birthday, America. Let's live up to our Constitution and our creed, and we will be all good. All right, take care, everybody. Have a good one.